This video is brought to you by Brilliant. Last week, Nvidia released its earnings report for the first quarter of 2024. Once again, America's third largest company massively outperformed expectations, with quarterly revenue soaring by 262% year-on-year, driven by massive demand for both its current generation Hopper GPUs and its new Blackwell chips. Unsurprisingly, these results sent Nvidia's stock soaring, and as of Thursday, shares are now trading about 20% higher than they were pre-earnings. All in all, this means Nvidia's stock has doubled since the beginning of this year, and multiplied tenfold since October 2022. Now, while Nvidia's numbers are clearly great, the dizzying rate at which its stock has climbed, accompanied by similar claims among other AI-adjacent tech companies, has sparked fear that the AI boom that's pushed the S&P 500 to unprecedented highs might in fact be a bit of a bubble. So in this video, we're going to have a look at why some people think the AI boom is really a bubble, why other people disagree, and why both sides could be sort of right at the same time. Before we start, if you haven't already, please consider subscribing and ringing the bell to stay in the loop and be notified when we release new videos. Now, before we get into it, the first thing to say is that this is not investment advice, and more generally, don't take investment advice from YouTubers. So, caveats aside, let's dive in. Is the AI boom actually a bubble? Well, the honest answer is that no one knows. So we're going to present both sides of the argument, and you can make your mind up for yourself. Broadly speaking, there are two types of arguments on either side. There's a technological argument over whether or not AI is actually the revolutionary technology that its advocates claim it to be, and there's a more financial argument about whether or not the stock market is looking bubbly at the moment. So let's start by looking at the arguments against AI being a bubble. The main arguments made on this side is a technological one, that generative AI is a genuinely unprecedented technology that merits the enormous investments and valuations that we've seen over the past couple of years. ChatGPT, for instance, was the fastest spreading tech platform in history, with an estimated 100 million monthly users only 2 months after launch. And AI's most bullish advocates argue that its ability to perform language-based cognitive tasks could transform our economy. Goldman Sachs, for instance, expects AI to essentially double the rate of US productivity growth, while McKinsey reckons that AI and associated automation technologies could increase global GDP growth by an upper limit of 3.4% over the coming decade, more than doubling the global GDP growth rate. The most bullish AI advocates, like these guys, expect AI to increase global GDP growth by more than 5%, which, assuming a baseline of about 3%, would imply a doubling of global GDP in the next 10 years. If these numbers are even close to the mark, then the extravagant valuations we've seen recently are easily justified. The second argument is that we haven't seen a proliferation of so-called bullshit companies that you usually see during bubbles. In the dot-com bubble, for instance, there were a whole load of companies that were basically just domain names rushing into IPOs and achieving eye-watering valuations. Similarly, in the crypto bubble a couple of years ago, there were a whole load of clearly bullshit meme coins that had no real value apart from their ridiculous names. Rather, most of the AI-related gains have been captured by the so-called Magnificent Seven, so Tesla, Meta, Alphabet, Apple, Amazon, Nvidia, and Microsoft, none of which could really be described as bullshit companies. The third argument is that even though the Magnificent Seven have seen steep rises in the market cap recently, they're not drastically overvalued. This is in part because some of their recent growth is in a sense a recovery from the tech drawdown we saw in late 2022, and their price-to-earnings ratios haven't changed drastically in the last couple of years. A useful comparison can be made between Nvidia today and Cisco during the dot-com bubble. During the 90s, Cisco was most focused on building routers and other internet hardware, in much the same way that Nvidia today is more about building the infrastructure behind the tech rather than the tech itself. But at the peak of the dot-com bubble, Cisco's 2-year forward price-to-earnings ratio, that is, the ratio between its current market cap versus its forecast earnings in 2 years' time, was over 100. Nvidia's 2-year PE ratio, however, is only 27, high by normal standards, but not absurdly so. Alright, so those are the arguments against AI being a bubble. Let's take a look at the other side. The first argument is a technological one, that AI isn't all it's cracked up to be. Proponents of this argument might point to AI's apparent plateau, the lack of obvious use cases, or liken AI to previous innovations that just haven't come through. But the second and perhaps more popular argument is that even if in the aggregate the Magnificent Seven's PE ratio hasn't changed all that much, it's still gone up a bit, and certain companies have seen bubble-esque increases. For instance, the combined market value of Alphabet, Amazon and Microsoft has jumped by $3 trillion during the AI boom, 150 times the $20 billion in revenue they expect to come from generative AI. Even Nvidia looks a bit bubbly. Its current PE ratio is nearly 70, more than double the other Magnificent Seven stocks. And while it justifies this with reference to future sales, this all assumes that Nvidia continues to dominate the chips market for the next couple of years, and that demand for chips holds up, which is possible but not inevitable. The final argument is that even if we haven't seen that many bullshit companies, AI is clearly a bit of a corporate fad at the moment, as evidenced by the exponential rise in earnings call mentioning AI. And while the Magnificent Seven have captured most of the AI boom, AI startups are increasingly popular with venture capital, despite an otherwise difficult investment climate. Ultimately, no one knows, and we'll just have to wait to see if or when the bubble pops. But perhaps it's possible that both sides are sort of right. Some bubbles, like the NFT bubble a couple of years ago, or the original tulip bubble in the 1630s, are wholly speculative. There's no justifying the price, and people are only buying because they think they'll be able to sell on to someone else at a higher price. But some bubbles are based on a genuinely revolutionary technology. It's just that market enthusiasm outruns the industry. The fibre optic bubble in the 80s and the dot-com bubble in the 90s, for instance, were predicated on the revolutionary potential of the internet, which turned out to be correct. It's just that everyone got a bit too excited a bit too early. It's possible that AI will end up being the same sort of thing, a revolutionary technology that just takes a bit longer to blossom than its advocates suggest. When making videos like this, we rely on tons of data analysis to interpret crucial economic data and understand political decisions. But this kind of analysis isn't just crucial for our jobs. As our world becomes more driven by AI and data, your job will likely require more analytical skills too. That's why we've been using Brilliant. Brilliant is the STEM learning platform which can teach you all the skills you'll need in an increasingly digital workplace. They've just introduced a whole collection of new programming and LLM courses, suitable for learners at any level, taking you through everything from learning Python to understanding the importance of training data. And Brilliant isn't just about memorization and lectures. Brilliant teaches you by doing, using active learning techniques to teach you the principles behind otherwise quite complex topics, and ensuring that you actually understand what's going on, with thousands of interactive lessons in maths, data analysis, programming, and AI. All of Brilliant's courses are split into easy-to-digest chunks, meaning you can quickly and easily gain real knowledge in just a few minutes a day, with fun lessons you can do whenever you have time, replacing mindless scrolling on the bus or waiting for coffee with something stimulating and rewarding. To gain access to Brilliant for free for a full 30 days, head to brilliant.org/TLDR. or click the link in the description. That way you'll also get 20% off an annual premium subscription, and they'll know that you came from us, which really helps us out. Thanks to Brilliant for sponsoring this video, and thank you for your support.